Hello everyone, we're going to talk about three things. First, let's talk about the euro. The euro has been strengthening in the past months relative to the dollar and the British pound in particular because of the different political catalysts that were coming up and how the European project was solidified or confirmed because of those political catalysts. The elections in Germany, elections in France, elections in Holland, and all those different factors have helped the euro recover close to 110 against the US dollar. However, we have to think forward, and thinking forward we need to think about supply and demand. And if we think of supply and demand, we are more than likely to see the euro weaken and lose some of that steam. Why? As I explain in Escape from the Central Bank Trap, what you have to pay a lot of attention to is the fact that supply of euros, increase of money supply, is growing much faster than demand of the same euros. The Bank of International Settlement shows that demand of euros in international transactions has been weakening while supply has been growing quite rapidly. More importantly, there is an excess of liquidity in the European Central Bank of almost 1.2 trillion euros. Therefore, it is likely that after these events, what we will see is that fundamentals prevail and that the strength of the euro relative to other currencies will change course. Another element that we want to talk about is oil. Everybody is talking about the possible OPEC cuts and the new cuts that they are talking about in the media. However, the fundamentals again are more important. Inventories have been rising to 5-year highs. Global demand is growing, but supply is growing much faster. And more importantly, diversification of supply is much more important. This is a very relevant factor because if you think about it, the geopolitical premium that we attach to oil prices falls because of diversification. And as the US increases production, it partially offsets some of the cuts of the OPEC producers. So let's pay attention to fundamentals. The market is extremely well supplied. I would be quite cautious on betting on a strengthening of oil prices into the future. Thirdly, let's talk about the earnings season. When we think about multiples and the stock market, we are seeing that stock markets all over the world are quite exuberant and that the multiples are rising. But as we are seeing, this earnings season is justifying some of those multiples. Why? Because not only we are seeing a better earnings season where consensus estimates have had to go up, but guidance is much stronger. So on the S&P 500, we have seen an increase of estimates, both from consensus and from companies, of not only just the earnings of 2017, but also 2018. The same thing is happening in the Euro stocks, where almost 20% of the companies have published better than expected results. So this gives a stronger confidence about the view that we have of keeping a long position on equities in developed markets. Thank you very much.